Welcome. Thank you for coming to this panel on ESG, moving mobility. So since people are coming in, let's have a little poll question. How many people think it's cold in the conference center? If you think it's cold, raise your hand. Okay. How many people think it's just right? Okay, I'm in that camp. Okay, at least I have a friend. And maybe improbable, but how many people think, God, it's so hot in here? Do I have any takers? No. Okay. So clearly people think it's a little bit cold. We promise to be interesting and exciting, so you won't have to rely on it being cold to stay awake. And as you've guessed, I'm an American, and this panel can be conducted in English. I wish I could greet you in French, but I cannot. But we have a panel today that I'm really quite excited about, because ESG's come a long way. It started out as social impact investing, with people kind of investing with the idea that they'd make lower than market returns. But that's changed. And so we're going to explore the impact on mobility. And I have a panel that has some friends that are old friends and some that are new. So we have at Hogan Lovells, which is a law firm of about 2,500 lawyers all over the world. We're organized by sector groups, and we have 2 of those 5 sector group leaders here today. Patrick Ayad, in charge of our mobility and transportation group, and Sharon Lewis, in charge of the financial services. And then from Valeo, Jean-Luc. So I'm going to ask each of them to introduce themselves a little bit, but ask a question, which is, when you think of ESG, what do you think of as most important or interesting in how it's changing the mobility sector? So Jean-Luc, go first, and maybe a bit about your background with Valeo.
Thank you very much, Lance. First of all, it's a great pleasure to be here with you and with distinguished executives from Hogan Lovells. And indeed, first a few words. I've been 15 years within Valeo, and I've seen it expanding clearly as a global tier 1 in, I would say, in a safer, greener, and smarter mobility. We are a global company of nearly 17 billion euro turnover, completely dedicated in electrification. So it's really good to be here in Autonomy, because we have many partnership of smaller companies that are here around. And we have really made ourselves, because we anticipated that 10 years ago, as an important player of electrification around the world, and certainly starting by Europe. To answer your question, yes, I do believe that ESG is bringing, I would say, the right elements of regulation, of pushes for investment planet, and also for the regulators to drive more and more sustainable and decarbonized mobility throughout the overall value chain of players. But I'm sure during the panel we'll have opportunity to get into more details.
Thank you. Sharon.
Well, thank you, Lance. Thank you, everybody. I'm frozen to start with, so excuse me if I speak quickly. I head, as Lance said, our financial institutions and investment group, and I have looked at sustainability, or ESG, through that lens for many years now. And I think that, the banks in particular were really the institutions that were pushed by the public sector, pushing them to channel funds to well-governed, responsible and ethical enterprise. And that includes the mobility sector. And, I also do a lot of work in the mobility sector, both for the old mobility organizations and newer ones. But from a finance perspective, financial institutions have obligations in a number of areas. First of all, their own obligations. And I think really their reporting obligations are becoming very stringent. And because those obligations are so stringent, that reporting obligation is pushing down into their clients. Governance is very important. Looking at risk and opportunity through an ESG lens, because their shareholders, governments, the public expect them to be funneling money into sectors, ESG products. The increasing development of new products, whether it be loans that are linked to sustainability goals, KPIs, or simply really the movement of finance to green finance and the movement of finance to supporting new areas in the mobility area. And I think lastly, it's that stewardship role for the banks. And I think that we will see that more and more.
Patrick.
Yeah, well, I think, new mobility is all about sustainability. If you look particularly at the players also in this, at this conference, if you look at the founders of the new mobility companies, they're coming from a generation where sustainability is super important for them, the climate change movement and everything. And as you know, 2 years ago when we were at CES, we were inspired by some of the, players there, introducing themselves not so much as an automotive company, but as a mobility company. And then, with the idea that we should not think from a business perspective first, but from a people's perspective. And what do people want? So we came up with a term called living mobility. And part of this living mobility is also sustainability. It's also inclusive, unifying, and objective. And so that was an attempt to think new mobility from a people perspective and not so much from a business perspective. It's like the push and the pull analysis we have been talking about. So ESG and certainly also the legal developments with some of the things that happened particularly last year is now everywhere. But I think new mobility is really, it's within the mobility movement, new mobility movement from the very beginning, we had ESG, so to say, implemented.
I guess I probably should answer my own question. So I guess what I'm seeing is that in the past, if you were just looking at an auto or heavy duty vehicle perspective, if emission stringency went up as governments were trying to pull companies into EVs, market valuations went down. And now we see that the markets are moving in synergy with the regulations. So now when a company announces a big electrification effort, their stock price goes up. And so that's allowing a synergy between the financial markets, the government regulation to achieve a goal. And that's really quite a big shift. But maybe now it's your turn. So as the audience, maybe exploring a little bit about why you're here. So what does ESG mean to you? So one possibility is, I don't know what it is. I just needed a break. The chairs looked reasonably comfortable. I've got to answer some email. So how many say, yeah, that's exactly why I'm here? Come on, I know you're out there, but it's okay. Yeah. Maybe number two, I've heard of ESG, but it's not yet a big thing for my company, but it might be, right? Anybody in that category? I've heard of it, but it's not a big deal yet. Okay, I've got no takers. So we got a couple other possibilities. Yeah, ESG matters. It's something that's relevant to my company. Right now, we're doing sustainability reports, or it's part of my company's sale. We're selling a product or service to try and help a company with their sustainability report. Does anybody see ESG in that light? Okay. There's another one. ESG, it's just a fad. It's just a marketing thing, and we'll be on to something else in 18 months. And maybe that one's not mutually exclusive. Anybody got a view on that one? Okay, well, everybody's here because they think it matters right now. So, okay, I was expecting a little bit more cynicism or maybe just needing a place to hang out. But let's go to ESG and emission rules, since that was the thing that I noticed as a significant thing. Patrick, you mentioned that governments have been kind of pulling companies into emission rules for some time. What's your perspective on that? Is that going to continue? How will that evolve? What's your take on that?
Yeah, I mean, emission regulations have been in place for a very long time, but they were not really, monitored, and they were interpreted probably a little bit differently. Now, of course, with the diesel incident in Volkswagen, it changed dramatically. We are still seeing a lot of activity after 6.5 years. Investigations are going on. At the moment, we have also a lot of class actions like civil litigation going on, starting now, also becoming very big in the UK, for example. We have it in France, we have it in Germany. It doesn't seem to end, which surprises me. After 6.5 years, I would have thought, why can we not move on? But there is still so much out there. But I think with electrification now, we will see a shift from, of course, internal combustion engines and non-compliance issues to EVs and electrification issues with compliance issues. So there's a lot of regulation around battery technology, and this will continue, and there will be even more. And we can also expect some non-compliance cases in this space. I think generally, companies are better prepared than they were before, of course, and not just because of the diesel issues, but certainly also because of the greater awareness of ESG in general. But still, I think we will have compliance cases also going forward. Non-compliance cases.
Go ahead, Sharon.
And I think actually ESG is an area that is ripe for litigation. I'm a transactional lawyer. We always say that transactional lawyers occupy one side of the brain, litigators operate the other. And I think it is very true here because obviously there is a real keen desire to make ESG matter. You've just said that, and therefore a desire to move forward. But I think that there will be a lot of issues where people are trying to move forward with products, be they EVs or financial products that we say are green or say contribute to the environment, and actually don't do as much as they could or should do. And I think there'll be a lot of mis-selling around those subjects. A lot of also shareholder activism in areas where the thought is that companies are not going quick enough, not doing enough. And so I think that our litigators are looking at this area with great interest.
Well, I'm tempted to run down that interesting path, but I'm going to come back to that in just a second and go back to Jean-Luc, right? I know Valeo is a global supplier, has headed into batteries and the like. How do you see those emission rules changing the sector from everywhere from micromobility to bigger vehicles? And what's Valeo doing in that path?
Yeah. One question on that globally is to make sure that in each region of the world, exactly for a global player like us, you are bringing the right answer at the right pace of regulation according to where you are acting. Fortunately, the trend is very clear. Whether you're in Europe, in Asia, or in the Americas, clearly there is a non-stoppable trend to downsize drastically the emissions. And whether one country decides to go carbon neutral, let's say a decade after, the ones who read which regions I'm aiming at, it's no big deal. We just have to be on the right pace on what our customers are asking. One thing I think it's extremely important for us, first of all, is to comply to what Sharon has just said, to be compliant with Science-Based Target Initiative from this kind of soft powers that are becoming more and more the benchmark and literally the hard power, or the TCFD as well by Bloomberg, and to bring all the different types of evidences that are asked by our investors, by the shareholders, and by what is becoming the benchmark in international finance. Now, in Europe, one thing that is very interesting is all what is going around, for example, if I take the example of taxonomy, which is to have the right level of access to finance for large companies that need to invest and need to have the right rate of investment to loans, for example. And Europe is pushing really ahead this taxonomy system in checking where the companies are doing the right investment on the real decarbonized way. So this ensures the investors that you will differentiate companies that are doing greenwashing from the ones that are really investing in decarbonized products and solutions. So I think that this is a very interesting path that will be certainly followed by other regions of the world for the different access to finance, and companies like mine are really working together with also the regulators, the platforms, clearly in the Commission, DG FISMA, the Directorate General for Finance, on how to apply this taxonomy. And we need to embark, which will be the next stage of, I would say, of challenges, the overall supply chain. Because in the mobility sector, we should never forget that you see the OEMs and the tier one suppliers like us, but you have thousands of medium and small sized companies worldwide that you need to embark in this amazing adventure. And also them, they have different capitalistic, I would say, structures. Many of them are family-owned companies. If you were quoting Germany, that would be typically the kind of Mittelstand where you need to embark this sustainability financial system also to that kind of size of companies.
Well, we're seeing the interconnectedness of these topics. And so you said something I think that's quite interesting, Jean-Luc, that the direction is so clear there's no going back. And so there was a big fear among environmentalists that maybe just on electrification that it would stall, that emissions rules maybe hadn't been so seriously focused and things would go back. And we've been advising clients that the global scale issue on your business side and the global push of direction means, at least on electrification, that's very clearly the future. Would you agree with that assessment? And Patrick, you as well? Okay. So then Sharon and Jean-Luc brought us to the next topic, the financial markets. And, you know, when you can make more money making ESG claims, it's not surprising that people want to make ESG claims. And there's a couple routes to dealing with that. One is the litigation, which Sharon gave us a nice introduction to. But the other one is some financial regulators are saying, no, we're going to regulate those disclosures and the content of them. And my environmentalist friends think this is the way that they will really change the world, because that will be more significant than anything else. So, Sharon, do you see not just a litigation risk, but do you think the financial regulators will actually put some rules around ESG disclosures?
Well, certainly governments are making those rules, and the financial regulators are developing those rules and embracing those rules. The difficulty for global companies is that those rules are not identical from jurisdiction to jurisdiction. And I think that is a major issue for global companies to work out. You know, if I follow the rules in the UK, am I also following the ones in the EU? Well, actually, they're no longer the same. The US is developing its own rules. They will not be the same as the rules in Europe. But I think that those rules and those reporting regulations are going to become more and more onerous. They've become very detailed. They require time. They require resources. They require money. And I think that they therefore also, and it's an interesting one, will develop or push the use of digital tools, blockchain, and the like, as companies seek to try to manage that cost, resource, and time issue.
It's a tough question. I mean, if we're on a publicly company, you have your auditors, and tracking dollars is relatively easy. You have your internal controls, you have your auditors. Imagine doing that for the energy use in your supply chain. So I know that Jean-Luc, you might have a perspective on that. How do you start to look at that as a global company? From scope 1 to scope 3, how do you get your hands around that?
Yeah, we certainly have to do the work in all the three scopes, but what you're aiming at, and particularly within the supply chain, is what is called technically, but I think the audience is quite expert here, the scope 3 upstream, for sure. First of all, I want to reinforce what Sharon said. It is a challenge also by jurisdiction, country per country, and we need to be compliant in whatever level of maturity you have in the dedicated country where you are present with your own market. But second, what we are doing, there are new tools, and Sharon just introduced a few, I would say, new tools. When you mentioned blockchain, there are new projects and programs. I can quote one on which Valeo is responsible for its own internationalization. It started in Germany with BMW. It's a subfield of Gaia X, which is a European program. We call it Catena X, and it is a way of sharing in all compliance and cybersecurity the data on environmental progress between suppliers to suppliers up to the OEM, to the final customer, that could be BMW or someone else. And that is a substantial, huge progress where you can bring an automated share and validated data where you're checking your progress on the different levels of CO2 reduction from the component to the subcomponents, the modules, and then that goes to the final vehicle, whatever it is. Now, the big challenge is to include into that kind of, I would say, virtuous kind of example, countries and sizes of companies where you're still far away from that. When you have a non-avoidability of having a supplier in Southeast Asia, in Africa, in South America, where you need to embark your obligation, your regulatory frameworks that Sharon was pointing out, and that they need to comply, well, you need to bring them in with the right pedagogy, with the right education, at the level of the supply chain. And this is what we've been doing at Valeo since I launched a program since now more than 10 years, and where we committed, for example, in the sustainability-linked bond that we emitted last year, which had a huge success with CACIB, Crédit Agricole Investment Bank, where we said in the second criteria, we're going to push the extra 2%, more than 80%, we're going to reach 82% by 2025. And these 2% are just 2% in volume of purchase, but which corresponds to thousands of small suppliers that we will bring to the level of sustainability check on ESG checks for smaller size of suppliers, because it's easier to do it with the big volumes. If I take chemicals, huge companies such as Solvay or the ArcelorMittal or BASF, these are huge conglomerates. They don't just supply automotive, they supply any kind of other industry, and they have their own roadmap of sustainability. But it's another question to bring double-digit or three-digit of $1 million turnover companies located in India, located in Thailand, in Vietnam, to bring them to the right level of sustainability.
So to close out the sustainability kind of idea, Patrick, are you getting questions from companies about how do they track or manage or contract for issues within the supply chain?
Yeah, let me put it that way. The regulation is increasingly requesting it. It's a bit confusing, of course. There's a lot of there are a lot of regulatory developments out there on the European level, on the national level. We just have the Supply Chain Act in Germany now, which will come into force next year, and then in stages. And now, only 2 or 3 weeks ago, a similar piece of regulation was introduced as a draft on the EU level, and this will be even stricter. One thing all these instruments have in common, we talked about this, is transparency. So transparency is the key thing when you talk about ESG. And you mentioned blockchain technology. You are looking into this. You mentioned Catena X. Actually, our firm has advised on the formation of Catena X. There are other initiatives in the automotive industry. In particular, IMAP, I think, is one where the large companies get together, particularly with a focus to make the supply chain transparent in the automotive industry. And I will give you an example. I advised, there were some like heavy metal lead issues in the automotive industry. I advised on one in 2017 or so. 2007, so 25 years ago. And so there were over lead parts in the vehicles of a manufacturer. The manufacturer did not really know whether they were over the limit, nor did they know where these products were coming from. They knew they were coming from Asia, but which supplier? So it took them months to investigate where the problem was. There was no transparency in the supply chain. And even like 3 or 4 years ago, 2019, where we had another lead issue in the industry, it was again a problem. There are certain databases where you could find some limited information about the parts and the content and whatsoever, but it's not transparent in the way where we need to be. And I know that companies like Valeo and others are heavily working on this, because 10 years ago, if you were going to the regulator and saying, well, I have a non-compliance issue, I don't know exactly what it is, and I don't know how severe it is, the regulator would probably, or the authority would probably say, okay, let's please investigate it. But in 5 years, this will not be an excuse. They will say, well, what about blockchain technology? Why? If you purchase a banana, you know exactly where it's coming from, in which tree, in which country. We want to have that for the automotive industry as well, and for everything that we are producing on the micromobility side or whatsoever. We need to get there, and then we will, experience the beauty of ESG in this regard.
Yeah, if I may jump in, because you give me the opportunity. Where I find that there is an incredible lever, it's on people, on colleagues. And we all know that purchasing executive, and I'm saying that very candidly and kindly, are people that have been trained, for the senior ones, to be Mrs. and Mr. minus X% to get every year. And now the new generation of purchasers that are extremely sensitive to sustainability are the ones that are teaching their bosses on to say, please, we need first to include the compliance and overall sustainability of our suppliers, and where they're willing to do either by questionnaires, assessment tools, and including physical audits, the realization of this supply chain. And this is also shifting and creating a complete mindset change in those métiers where indeed sustainability, if you want to have a career and finish your career as an executive vice president of purchasing, you absolutely need to include that as of now. Otherwise, you will be out.
Yeah, I think my background is in mathematics, and exponential curves kind of have this slope where it seems like nothing's happening, and suddenly it's like, what happened? I'm behind. That's kind of happening with ESG. As Patrick noted, some of these issues have been around for a while. Valeo's been on sustainability, and now it's all everybody's talking about. So let's have another poll question. How many people think that government regulation and ESG issues are going to get more significant in the coming years? How many think, nah, it's going to just flatten out? All right. So I think we have a pretty strong consensus that this is going to get an ever more significant issue. You know, on ESG, there's kind of a challenge of what is it? And this is going to sound like a cynical statement, but it's not. One way of understanding ESG is to think of it as an acronym that means everything that sounds good. Because there's an aspect of that. So when we started out, I asked how many people thought it was cold, and the vast majority said cold. But myself and one gentleman over here thought the temperature was just right. And when we're looking at ambiguous things, even with data, is 15 a big number or a small number? People have a different perspective. So of the 4 major ESG rating entities in the United States, a company has a 25% chance of being simultaneously ranked in the top category and the bottom category. And that's kind of a problem, because if you want to be in a top ranked thing, how do you bridge that gap? So that kind of leads me to some questions like, Patrick, are companies coming to you to saying, hey, we've got to do our sustainability report and we want to have a good ESG rating? How do we do it? Have you started to have those questions?
Not really on our end, I have to say. I mean, we are dealing more with the regulatory framework, but I do think that there are some genuine efforts in the companies that deal with these issues, particularly with people that have a position like you, like sustainability heads, and they have really good ideas and they really want to make it happen. I don't know if it landed like everywhere in each company yet. I think more will need to happen, but I do think that it has a significance also at Valeo, if you want to comment.
Yeah, for sure. I mean, it's now it's many years that we are embarked in many exercises of reporting. I mean, obviously what it's called now the Universal Registration Document, but also on the sustainability report, and soon we will issue the climate report. We will be the first tier one to issue it. And indeed, these are very different and complementary exercises. It goes back to what Sharon was mentioning, where there is an amazing push also from investors to really drive these reports in the most transparent and clear way so that it's open to all the evaluators. And we have really started something that is I would say really amazing in the last, I would say 2 years, is the amount of conferences for investors just dedicated to ESG. We have something like every month and a half, and this is enormously driven by financial places like obviously New York, London, but also Paris, Frankfurt, all the main, I would say, financial hubs. And I'm sure this will also gain other regions of the world, particularly, namely Asia.
Well, and it hits everyone. So last month I spent 3 days at an investors conference for a not-for-profit where I'm on a few $100 million investment committee. And 3 days of how do you review an ESG report, a sustainability report, how do you put that into the factors so it's there in the investor community in a major way? Sharon, I know you're in the financial sector. Are you getting questions at all about this yet, or it's not yet there?
No, it's there. And actually, in the mobility sector, we've just been appointed as Global ESG Compliance Council. What does that mean? I think it means really looking, and again, using technology to look and scan regulation, whether it's E or S or G, scanning regulation across the globe and working out, actually, it's one question. What is the practical implication of that regulation for me? What does it mean for my annual report? What does it mean for my sustainability report? What does it mean for my climate report? How do I fulfill all these obligations? And at the same time, I've got a business to run. I've got to make money. It is a vast amount of work. And I think that actually at some stage, perhaps in a kinder world, in a world which is not so troubled, it would be very good if regulators were to get more together to create a better framework which was actually easier to comply with by everybody.
Yeah. And
so just to add on that, because that would have been also my next point. We get a lot of requests on how to implement the new laws, right? I mean, in Germany, as I said, we have the Supply Chain Act, and there's a lot of insecurity how you're going to do this, and simply because there are no standards yet available. And I think this is one of the most important tasks also the regulator has to ask, how do we develop standards in terms of what does it mean to properly implement certain things that come from the legislative side. And so the standards have yet to be developed, and that's the difficulties that companies are facing and why they are approaching it.
right. So I think, well, in that world where we have uncertainty of the rules, uncertainty of conflicting reviewers, I guess I always preach the same story. So it's like, how do you handle that uncertainty? And for me, the answer is know your values and know your business. And that means know what you're doing and why you're doing it, and then make the case, be candid and clear, and do what you say you're going to do. And then some reviewers will love you, and some might not say you're awesome. You'll, of course, comply with the rules as they come out, but at least then you know what you're doing and why you're doing it. And that's the best chance. But saying different things to different entities under different regulatory constructs, that's a recipe for disaster, and you'll need a lot more of Sharon and Patrick's time if you do that. Let's maybe move to on the social side of issues and geopolitical risk. So on the social side of things, maybe the labor practices or the practices of a nation state, how they treat their individuals, or maybe as we've seen recently, maybe how a nation behaves relative to other issues can create, geopolitical risks, all kinds of challenges. How do we handle that in this what was once a very interconnected world as it's kind of decoupling a little bit? Jean-Luc, you're on the ground floor of that in a major company.
Yeah, I reckon that the social aspect of the ESG is going to increase, particularly because it will be beyond the environmental and the governance aspect, particularly on the supply chain, where the topic of human rights is going to grow. And it started, interestingly, also by selected countries. I mean, United Kingdom, for example, has been very much up ahead. And this is invading everywhere, European Union, US, Asia. And the different responsibility on the layers of the supply chain are really required to check what is their -1 layer and make sure that things are in order. We have implemented in Valeo very severe assessment through due diligences and also at contractual signing that we completely overcheck what's happening. And we also have corrective action. I mean, I can quote something that now it's part of the past, where I have personally worked with the human resources department of a Swedish OEM, you can guess which is what, in checking other tiers in Malaysia, where with immigrant population at factories were not treated with the same human rights as Malaysian workers. And we have, because the supplier was strategic, and it was just, I wouldn't say it was not complying, but was misusing the importance of the human rights, we were able to bring a corrective action, and this is now a day in all set. And this, I think, will be, I would say, the main important aspect to be able to bring corrective actions in many countries. And this is really what I will insist is on working with all the international regulatory bodies, the working agency of the UN based in Geneva, the ILO, and also to work with the different HRs and the unions, or the representative in countries where unfortunately there are no unions, the representative of the workers. Because if you engage your own HR, also there it's the same similar topic that I mentioned with the purchasing teams, the HR, the human resources will be extremely sensitive to make a better world at the level of HR of their own suppliers.
Yeah, and just to add on this point, particularly when it comes to human rights, it gets very cultural. And that's a difficulty, as we know, in our world. And so the requirements that we have in Europe, when it comes to human rights, are very high, the standards. And they may be lower in some other parts of the world, as we know. And this is also why we're doing this, but this conflicts and may conflict also with standards and rules and regulations in other countries. It's a very interesting topic. We've already had some queries in this regard. So a certain standard that is required here may conflict with a standard that is required in another country. What do you do with this? This is the geopolitical risk. I give you another example. It's not just the human rights, data, cybersecurity. It's also part of the social responsibility. We all know that you treat with data differently here in Europe than we do, let's say, in China. And there are also laws in China which say, no, you shouldn't look into that data because this data may be protected by the state, for example. That may conflict with the laws and the rules that we are now doing in Europe, and it will be very interesting to see how this works out.
Yeah.
Sharon, do you have a 10-second wrap-up for you?
Yeah, I think, and unfortunately goes beyond laws and rules. It actually goes to morals and consumer choice, and actually also the choice of shareholders, and trying to make everybody happy, I think is going to be very hard.
Yeah, and I add one thing, and I think we've all kind of touched on it. There's now trade-offs in this world. A few years ago, one could say we had great confidence in supply lines. We could just look at price. Now, when one optimizes for consumers and regulators and rules in the US and Europe, you have a trade-off of a challenge in other locations. And so it's making choice. And that's a very hard thing because we all in business want to have everything and make it easy. I guess to wrap up, if you were on a listed company board and you were talking to your auditor, they would say to your risk committee, there's 2 enterprise level risks that you need to make sure you're focusing on, and every company needs to do more of it. And one of them is ESG considerations writ large, and the other is cybersecurity and privacy. And then, as Patrick noted, cybersecurity and privacy are also part of ESG. So these issues are, I think, something we're going to have panels on for a very long time to come in the mobility sector. And thank you, Jean-Luc, Patrick, and much appreciated. All right? Sharon,
Thank
take
you.
care.
Thank you.